In this video, traders, we're going to look at how do stock exchanges make money. Stay tuned. Hey guys, very warm welcome to. So, how do stock exchanges make any money at all? Well, let's have a look. They've basically got 4 streams of income, and this income makes them decently profitable. New York Stock Exchange makes over $1 billion a year. The last time I looked, it could be even more now. It's all about the volume, all about liquidity, all about the amount of transactions that are taking place, and all about the amount of companies they have listed on the exchange. Of course, big rivalry between NASDAQ and NYSE specifically. But before we get into that, let's have a look. So the first one is listing fees. So there's an annual, I believe it's an annual fee to list. So that's ranging anywhere from $25,000 up to $250,000 for NYSE, obviously depending on the size of the company, and that's just as regular source of revenue. Think about thousands of companies that are listed on that exchange. That's a nice source of regular income. Now, let's have a look at the costs in a moment. Number 2, data fees. So monthly fee for the data. So you know when you go to a charting package and you say, hey, I want to have this chart package. They say, yeah, the software provided costs you X, or maybe it's free. And then if you want to have real-time data officially from the exchange, you're going to have to pay an exchange fee for that. So there'll be a monthly fee for data. Now, of course, retail traders don't have to pay that much, but professionals, all those professionals out there, will have to pay a large data fee for that. If you notice, sometimes you get a note down if you're a professional or non-professional, and the fee is dramatically different. That's because they want to charge you more if you're using it for some other purpose. Now, of course, there's premium data and technology. So if you're repurposing the data, perhaps you're doing something with it and packaging it and selling it on, then you're going to be on a premium product. Okay, they're going to say, yeah, you can have that data, something like, and maybe Bloomberg is their own kind of thing, but something like that. There's a terminal that brings in the data and then distributes it out. That may well be on a premium package or a premium fee. The same with technology. If you want the data quicker than anyone else, you can probably pay to upgrade and have some sort of diamond feed that guarantees the data in a certain period of time. And this is kind of that high frequency trading thing, right? There was direct lines in and they were getting the exchange from this and that and the other. So they're happy. At the end of the day, guys, these are a business. Stock exchanges are an actual business. They're happy to facilitate any requirement and they'll charge you for it. So if you want that data stupidly quick and you've got the money for it, I'm sure they've got the technology to back it up. So the premium data and technology is another one. And of course, the big one that we all know if we trade directly on the exchange is the fees per trade. So they take a small percentage of each trade, or they take a fixed amount, like 0.00 something of a cent every time you trade. And that just goes into the pot. So if you think about the portion of your trading costs, you have the commission and you have an exchange fee. So your exchange fee is what goes directly to the stock exchange. Now, the bigger the volume, the reduced fee. As with everything, guys, you know, if you're doing a lot of volume, there's a kind of negotiations take place. But if you think about the costs these guys have got, yes, this is nice money, revenue coming in, but they've got to have, there's a lot of staff, there's a lot of technology, they've got to make sure the uptime is just spot on, because as you know, if it goes down, everyone hates it. Now, of course, if it goes down, not only do the traders are annoyed by it, brokers are annoyed by it, it also means that they can't attract the new listings that they want. When they've got those big IPOs, of course, a big IPO, a big company wanting to list, is a coup if they get it, because not only do they get the annual fee, now, of course, they probably do some deals with them and stuff, not only do they get that, but they're getting the fees per trade. And if you're talking about a company that's very, very highly traded, very, very high volume, they're going to make an awful lot of money by having that listed. And in reality, probably not that much technology. It's not like you're fulfilling something that takes a lot of margin to fulfill. The technology is all there. I'm sure they just have to kind of boost it a little bit and add some more hardware, etc., and then just bolt in what's needed to facilitate the trade of that company. So really interesting, guys. Listing fees, data fees, premium data, all this. So all these costs are obviously quite expensive, but these guys are making money. If we just look at some of the top few, this may be a bit out of date, it's the closest I could get, but it gives us an order of magnitude, right? We've got the NYSE, the total value of companies on there is 30 trillion. I think it's probably more now. This was late 2017, I think this data. So the way I've been watching this video, it might be adjusted, but you get the idea. NASDAQ 12 trillion. I'm sure that's different, a lot different. Now LSE coming up at 5.8 trillion. I actually thought that was less than that, because I know that the London Stock Exchange is a decent exchange. There's a lot of business from a lot of countries, a lot of companies, from a lot of companies on there. A lot of companies from a lot of countries on there, but I didn't realize it was quite that big. Now, okay, if you're comparing it to the big boys in the US, it's nowhere near. But anyway, we've got the Tokyo Stock Exchange coming just behind the London Stock Exchange. We've got the Shanghai Stock Exchange there at 5 trillion, and Euronext just under that, and we've got some others going down to about number 10, I think, is Bombay Stock Exchange. So you get the idea, the order of magnitude. US leading the way, as often is with these kind of things. They've got some big hitting companies on there, haven't they? We know of them, we don't have to list them, but that is really how stock exchanges make money.